Alpha Fam, Coach Sham here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the Alpha Syndicate channel, if you could please give us a like, comment, and a subscribe, we really do appreciate the support. So let's get into the market, guys. So we have definitely been rallying over the last few days. All right. With that, I've said this several times. There's a couple dynamics going on and a couple scenarios that I think could play out. I have been saying, if you even go back into my videos just a couple of months ago where I was talking about this time frame, I said it is a high probability that Bitcoin breaks out sometime inside of April, mid-April, going into May because of two things. One, Fed Chair Powell is going to be replaced next month, all right? We got Kevin Warsh coming in, and I think everybody understands that he's coming in with the understanding that his number one job is to lower those interest rates. I think the market's pricing that in, all right? I think the market is also pricing in the fact that we have a ton of liquidity being dumped into the market with QE, all right? Now, I've said this several times. I said if you remove the Iran FUD, there's really nothing else but really bullish things to look forward to and different catalysts that are coming up this year. But with that being said, until we have a 100% deal and there's zero bombings and all the escalation in the Middle East is over with, there is still the high probability chance that at any time America, Iran, or Israel bombs each other or something happens, the Strait of Hormuz gets closed, whatever, and then this entire move gets retraced. I am also playing a little bit of caution because we're also in we're in a major area of resistance right now. You can see this area right here has been a major area of resistance. This is where we basically lost this level, and when we broke back down, we could not reclaim it. You can even see when we reclaimed the 50, we came and rejected, and then we pushed back down. We are in that general level now. Something else is another level that I'm looking at is this, basically this resistance zone that is this trend line up here. It reminds me a lot of right here, guys. And the reason I'm talking about this is, and I'm not trying to, scare anybody, or I'm not trying to say that there's, this is 100% a bear flag and it's going to break down. But this is something that we have to set of probabilities, and we have to be very aware of every scenario that could potentially play out. All right, guys? So with that being said, I am noticing that, even over here, when we broke above the 50, I remember people were getting pretty bullish then. We broke above it. This is after we kind of held this general zone after we broke above it the first time. We came back down and retested. Now, I will say this was not as clean of a retest as this was, because we actually deviated under the 50, unlike when we did here where we found real support on it. But you can see when we came up there, we rejected, and this is basically what broke down the bear flag, and this is what caused this initial move down here. So with that being said, what I'm worried about is if this thing starts to drift up, everybody gets super bullish, and then all of a sudden there's an attack, and then you could see this entire move get retraced very fast. All right, guys? So just play it with caution. All right, guys? And I'll tell you what I think would be a good, kind of the best of both worlds, because I said the same thing just even a few weeks ago that I would change my bias based upon a couple of things, and there's absolutely no denying that the market's showing strength right now. All right, but with that being said, if we don't reject from this zone and we were to reclaim this and find support and push off, that would be a very, very good indication that this prior resistance zone has now turned into new support, and that we probably aren't going to have the possibility of coming any further or going any lower, especially if they can get 100% some type of ceasefire and peace deal, and this actual conflict actually comes to an end. All right, guys? And even Russia posted, I was reading a post last night, there were some top Russian officials said that they think that these peace deal talks are nothing but a distraction for additional military aggression and to get the oil lowered. All right, guys? Because we understand that oil has been skyrocketing, and we know for a fact that it has now started to drop. It not only has a drop, guys, something that's very significant right now is we have finally broken below the 50, and have closed below it. All right, guys. What I want to see is this. We need to stay below this level. I am expecting, definitely, I want to see a bearish retest of this 50. I imagine this thing will probably start to drift up a little bit higher. And as long as no aggression, nothing happens, then I would expect this thing to reject and then continue its drop down. And again, if this peace deals are serious and the negotiations are serious and they 100% get some type of deal and it's announced on both sides, then you're going to expect oil probably to come back down somewhere towards the region that it was at prior to this conflict. You can see we were basically hovering in this general, basically $70 to $50 region for oil for months and months and months. And you can see, we've been in this general zone, and it's actually been trending down since Trump came into office until this conflict. So I know a lot of people want to see oil go down. I want to see oil go down. It's going to be very difficult for, even with Kevin Warsh coming in, to take over, for them to cut interest rates if inflation's skyrocketing. Obviously, Trump knows this as well. So I think this is a big reason why he's been so aggressive with trying to get this conflict over to get these oil prices down. So with that being said, guys, there's absolutely no denying this. And I said it weeks ago. I said even when we were in this downtrend, I said if the S&P 500 reclaims the 50, uses it and finds it as support and pushes up, that would change my bias. And you can see the reason why that would change my bias. That caused us to go and break into new all-time highs. So we have futures at all-time highs. We have NASDAQ just barely broke into all-time highs. You've got the S&P 500 at all-time highs. I mean, you kind of see the silver lining here. And again, if there's any type of bomb happening or Strait of Hormuz is closed, you can expect a lot of this to be retraced, but there is no denying the fact that there is a lot of strength coming back into the markets. I think a big driver of that strength is liquidity, guys. We know that QE's here. We've been I think this channel is one of the only channels that are actually bringing the actual data and not just hyper-focused on the news articles of the day. We've been focusing on this for a while, guys. We know QE's here. We've been talking about this year. We've been planning for it. We've been setting limit orders. We've been DCAing. We understand the setup, and I think that if people, and I've been saying it again, I think people are going to fade this, guys. I think a lot of people are going to get left in the dust. I think they're going to get left sidelined because they're going to keep this 4-year cycle thing in their head. They're not going to want to deviate from it, even though we have totally different conditions than we have any other bear market. And it's like I said, you can't compare this bear market to others. It's comparing apples to oranges. I mean, just the biggest radical difference is last bear market was started because of quantitative tightening. This bear market starting in the process of beginning quantitative easing. I mean, that's a radical difference, guys. So to compare the two, I just don't think is very smart. With that being said, Dixie has obviously, we haven't talked about this in a little while, but I want to mention it. So Dixie's still in this general range. It has started to show weakness and break back down. We want the Dixie to go back down, guys. We want the we want the dollar to weaken a bit because it makes your assets go up. It takes more assets. It takes more dollars to buy more assets. So we're seeing the Dixie go down. I do think that Trump's intention the whole time for his presidency is to kind of do what he did the first time and really break this thing down. But I think the last time he got it like into the 80s or 70s. I think that's his goal right now. But just kind of monitoring this, guys, watching it. USDT dominance. We've talked about this several times. All right. We've been in this range for a while. I've talked about it. The first time when we broke below the 50 right here, I was pretty excited, but I had a feeling it would just be a deviation. This time's a little bit different. Not only have we broken below it, we have rejected from it. We've come back up and done a bearish retest and pushed back down. I would definitely expect this thing to probably drift back up and do another retest, and it could even possibly deviate, try to trick a couple of people. But I think, and I'm hoping, that the local top for USDT dominance is in. This thing doesn't drift any higher, and we actually start to see this thing go back down further and go down lower. You can see, if you look at every time we've broken out of the bear market, this was the first run that we had in crypto back basically leaving Q4 of 23 going into Q1, and basically the local top was March, which we've talked about that actually correlated with this. Last time we had a local top at that time was right here, March of 2024. It was kind of funny because it also coincided with it being the local top for crypto and a bunch of other stuff. So with that being said, guys, just taking a step back, looking at everything, taking a deep breath, I think the markets are showing us what's going to happen here soon. This is Bitcoin dominance, guys. One thing I want to highlight is we are finally, and I'm not excited about this, and we still have till Sunday, but we are starting to deviate just a little bit above on Bitcoin dominance, above the weekly 50 EMA. And we've done this a couple of times. You can see we deviated like this one time. We really deviated above it, but we got back below it. This time we deviated, but we were able to close below it. Even this time we barely closed above it, but the next week we hard rejected and we pushed back down. And I'm hoping and I'm praying that's probably what's going to happen here. I think this thing is going to reject. By the end of the week, this thing should close below it. And I'm hoping, as long as we get a continuation, as long as the markets and there's no continuation of conflict, I think the market's going to continue to price in a peace deal. And then I think the market's going to start to switch gears from the negative FUD to the positive catalyst, which is the QE, Kevin Warsh coming in, and just generally speaking, midterm years, guys. And with all that, I think people are going to understand it, and I think we're going to start seeing altcoins and a lot of these projects that have been really beat down starting to come back to life. All right, guys, I know everybody's been talking, even on crypto Twitter, about Rave and this token that's basically done like a crazy multiple. I remember seeing it the first time at like $2. I think it ran up to like 16, 17. It was something crazy, guys. This is what you're going to start to see when the bullish environment comes back. You're going to start to see these tokens that you never even heard of start just ripping. All right, guys? And this is kind of one of the things that help kind of set the FOMO that comes back into the market, because people say, hold on, crypto actually isn't dead. It's actually starting to show signs of life. And then people are starting to kind of hopefully start to decouple away from this whole 4-year theory, guys. I think crypto is a macro asset at this point. I think it's a significantly different asset than it was back in 2021. And if you want to learn this stuff, guys, if you want to learn how we connect the macro, the fundamentals, the technical analysis together, if you want a place where you can get coached and mentored by somebody like me, click the link below, guys. We'll see you inside.